Well, let's pick up more, of course, on the Reserve Bank's decision, the Monetary Policy Committee deciding to keep interest rates unchanged. We've seen, of course, a period of rate hiking. Frank Blackmore is the lead economist at KPMG South Africa. Frank, good afternoon to you. Is it the right decision to take a little bit of a pause despite yesterday's inflation figures?
Good afternoon, Stephen. Yes, we believe it is. And I think the governor has been pretty consistent in his messaging with respect to this as well. Even in the Q&A this afternoon, he said that one mustn't get sidetracked by looking at the month-on-month values, especially for their organization, where they have models that track sort of the underlying. And for them, what's important is inflationary momentum, and that is still on its way down if you take out these more volatile aspects of the inflation. So core inflation for the bank has been revised down again to 4.8%, so just marginally from 4.9 at the previous meeting. And therefore, I think the bank feels that their predictions are well on their way to fruition. No need to increase rates at this point.
The bank's comment, and he's made this comment consistently, that they see the interest rates at the moment as restrictive, in other words, difficult for business. It shows you how tough life is. It's an important comment.
Yes, I think that is an important comment, and I think it was important to make this point once the interest rate had become restrictive. We all got a bit used to working on a repo rate of 3.5% following on from COVID, and even if at sort of doubling that got us probably to a parity level at around 7%, and then anything above that started to enter restrictive territory. And I think the governor just wanted to perhaps educate the public as well that moving from 3 to 4% is not necessarily restrictive on a longer term equilibrium basis, and only began to be so sort of from 7.5% upwards.
Eskom and Transnet having such a big impact on all of this, and of course we still have load shedding stage 4 until further notice at the moment, but the story of the last 2 weeks has really been about Transnet, the ship stuck at sea and the outer anchorage at Pier 2 in the Durban harbour. We've got the problems with railway lines and moving coal through the Richards Bay coal terminal as well. Suddenly Transnet is becoming a big economic factor.
Yes, I think you're right. I think from now on we're going to be focusing more on probably idiosyncratic or country-specific factors that are affecting inflation, because if we look at the global factors, sort of your fuel and food indices have come down quite a lot. But obviously in South Africa, if you lack electricity and you're part of the food production chain or farming, you have to spend more money on ensuring that cold chain is sort of consistent throughout. And obviously that cost gets passed on to us as consumers, meaning higher prices. And it's the same with your logistics channels. So if they have to make other plans or if there's delays, they obviously for a lot of items, there's a lot more spoilage. There's a lot of delay in sales, inventory backups, etc. And that also leads then to higher costs for consumers in South Africa and higher inflation for longer, leaving interest rates higher for longer.
The outlook for inflation, I mean, here and around the world, you'd like to think specifically food price inflation will start to come down. It's certainly down off its highs. Is it possible to know what's going to happen? I mean, petrol's a big part of this. The governor is referring to this phrase, he's used it several times now, geopolitical tensions and climate change, all having an impact.
Yes, indeed. I think if we look at food prices and you break them down to specific sectors, we've seen the inflation come from different parts. Initially, with the war in the Ukraine, it was your sort of oils, sunflower oil, etc., cooking oils, that was hugely inflationary. And if I look at yesterday's figures for inflation, vegetables are now sort of 23% odd, and they sort of having an inflationary impact. And that is also, I guess, depends on your seasonal adjustments and also, how just costs move around the economy at that point. Of course, the governor always mentions that the risks are to the upside, and there are a lot of them. If there's an oil price shock tomorrow or further fuel shocks, or as you said, geopolitical shocks could impact both of those, as we saw with in the invasion of Ukraine. Also, things like El Nino, what are the long-term impacts are going to be of that weather phenomenon on South African agriculture? Electricity and logistics, are those things getting better or are they getting worse? All of those things have potential to impact inflation over the longer term and will be watched by the committee.
Is there a possibility then that we might actually have more hikes next year? I mean, Frank, I really don't want to think about that. I don't want to contemplate that. But from what you say, it's possible.
We're talking possibilities here, and there's always a possibility of it happening. You know, if the war were to escalate either in the Middle East or Ukraine, prior to this year, there was a lot of speculation on would Putin move to nuclear weapons? Would there be more countries involved? A lot of those things would create global shocks, as we've seen, and those could result in higher inflation. But I think the likelihood is probably not going to be in that direction, and we're going to see further reductions in inflation, and eventually, over the course of next year, reductions in interest rates, and which will be well received both by business and customers.
Frank Blackmore, thanks very much indeed, lead economist at KPMG South Africa. Do appreciate the time.